Hello everyone. Now we will review some concepts of governmental accounting using the CPA prep materials. So these concepts will touch the objectives of governmental accounting, the users of governmental accounting, GASB's conceptual frameworks, and then later we will focus on fund accounting and government-wide financial statements, and we will also focus on some transactions. So what is the main objective of governmental reporting? Why do the governmental units need to report or disclose their financial information? Because they are actually accountable, because they are using huge amount of resources, so they need to let the public know how they are using all those resources and how they are how much they are spending on different type of services that they actually provide to its citizens. So who can use governmental accounting? So any governmental units, state, city or municipal, any type of governmental entity can use governmental accounting. And then public universities and colleges, because most of their fundings and resources are coming from government, so they also use governmental accounting. Or any type of government funded healthcare organizations, they can also use governmental accounting. So let's take note on the users of governmental accounting. Now let's talk about the governmental accounting principles and standards. So the GAAP, or the generally accepted accounting principles for governmental entities, are actually prepared by the board, which is known as GASB. So I believe all of you can remember GASB stands for what? So GASB stands for Governmental Accounting Standard Boards, and they have the authority to prepare the accounting standards for governmental unit. And here we actually learn from our chapter 17, and we'll recap those different type of categories and the hierarchy of those gaps. So it used to have like 4 different categories, but since 2015, GASB actually issued the statement number 76, and they mentioned that now all source of authoritative US GAAP for any type of governmental entity is divided into 2 broad categories. One is the category A, which actually includes all GASB's standard and board statements. Another is category B, which covers GASB's technical bulletins, GASB's implementation guide, and all AICPA literature. So basically category A has the most authoritative power, and if anything is not found in category A, then any governmental entity can find the solution or can consult with category B. Now we will focus on GASB's conceptual framework. The GASB actually has outlined its conceptual framework for governmental financial reporting, and it is mentioned in GASB's concept statement number 1 to 6. So you can take a note. It is actually in the concept statement 1 to 6. And it basically shows all informations, and it talks about all those informations, and those are basically used to assess the accountability of any governmental units. So for all financial information that any type of users can use, it has like 2 types, or 2 areas. One, you can say the users can look at the general purpose external financial reporting, so that covers the basic financial statements and some supplementary information notes, and the overall comprehensive annual financial reporting, which we also known as CAFR. So basically the users, they can use any type of information to assess the accountability of any governmental unit, and basically the areas are general purpose external financial reporting, This is actually for external users, mostly for external users. General purpose external financial reporting. And then here there is another type which mostly internal focus. Those are kind of budgetings or any special purpose reports or any other economic information. So here another type of information that can be used by any users, which basically focus on budgets or any other economic information or any indicator that shows the efficiency and economic condition of a governmental unit. Now to recap some other concepts, we all know that government can do two types of activities, and we also learned when basically they prepare their government-wide financial statements, they focus on these two types of activities. So these two types of activities means the governmental type and business types. So remember, governmental type activities means that those type of activities the governmental unit is providing services to its citizens and the public, and those are funded by taxes. On the other hand, for the business type activities, anyone can use those type of services, but those are mostly funded by users' fees. So one is governmental type activities. So those are financed by tax. On the other hand, you have business type activities, and those are mostly financed by or supported by users' fees. And we actually discussed some examples like when you use a toll road or a bridge. Now, who are the users of these governmental financial reporting? So basically the users could be anyone, any public, right? So the users could be citizens, taxpayers, any legislative authorities, investors, or creditors. So anyone who is interested to look at the information and to know the efficiency of the government and how they are using different type of resources and funds, how much they are spending on a specific services. So anyone can get the information and use the information. And of course, any investors or any grant providers or creditors, they can also look at the governmental financial statements, especially the general purpose financial statements, which is mostly for external users. Now, why should they use those information? So what are the uses? So basically they can use those information for comparison perspective. Specifically, if you focus on the internal financial information, which is mostly like for budgeting, so they can compare what is the actual financial results to their budgets, or they can also assess the information and check the overall conditions of a governmental operations, or they can also check whether the government is complying any type of finance related laws, rules, or regulations. And overall, this financial information will help any users to evaluate the operating efficiency and effectiveness of a governmental entity. Now we will learn one important concept, and that actually covers the accountability and inter-period equity. So let's try to understand what does it means, accountability and inter-period equity. So basically, for accountability, it means that governments actually provide the information to its citizens to justify how they are raising the funds or different type of resources, and then how they are using those resources. So basically, this is actually to justify the raises of the funds and the uses of the funds. And this type of financial reporting actually plays an important role because every governmental entity has some responsibility and duty and accountability to its citizens. And definitely they have to maintain this minimum level of disclosures, and if especially if there is any legal constraint imposed by the citizens. So this is all about the accountability. Now, what do you mean by inter-period equity? So basically this focused on your internal information, that means budget, whether the governmental unit entity is preparing a balanced budget, and then at the end of the period they can also compare that how much it was for their budget and how much actually they are spending on every item. So they can also judge whether the current period's revenue is sufficient to pay for the service for this current years, or whether they have to move the burden or transfer the burden to the future taxpayers. So basically this type of budgeting will help to assess the current period's revenue sources and whether it is enough to pay all of those services. So that means whether the revenues will be sufficient to pay for the services. Because if current year's revenue is not sufficient to pay all those services, then maybe future year or future taxpayers needs to carry the burden to pay for services. Now we will focus on the characteristics of the information in governmental financial reports. So basically you learned about the concept, all those concepts for the conceptual framework for for-profit company, and now you will learn the conceptual framework for governmental accounting and the major characteristics of the information. So there is one beautiful tips at the end. I will also let you know. So let's take some note in the meantime, then I'll provide you the explanations. Characteristics are understandability. That means all those financial reports should be easily understandable. They should be as simple as possible. And then the second criteria is reliability. That means we can rely all those numbers. We can verify all those numbers, and that should be free from any biases. So second criteria is reliability. That means the information is verifiable and free from bias or error. Now, third criteria is relevance. So for relevance, it means that all those information should have a logical, clear relationship, and it will make a difference to the users. So that means it will make a difference. And of course, at the same time, all information is of course relevant when it is presented in a logical way, and after knowing the information it will make a difference to the users. Number 4 characteristics is timeliness. That means information, all those reports should be in time. whether it's external reporting, that means their comprehensive annual financial report or any budgeting or any other type of special reports, all should be in a timely manner. Now, next criteria is consistency. That means every year's report should be consistent. They cannot change year over year. So it should not change frequently. And the last criteria is comparability. So comparability means that you can easily comparable from one reporting to the another reporting. That means it could make a difference to its users, and they can of course understand all those transactions and all those structures. So it's easily comparable. So now here is a trick that the CPA material actually mentioned, and that may help you to remember all these characteristics, and they call it you are mice. So U means understandability, R means reliability, M actually refers to relevance. Relevance means anything we can call it relevance if it would make a difference. So that's called the relevance. And timeliness, that means in time. So that's why they take the I, in time. And C means consistency. And E means comparability. That means it's easily comparable entity to entity. So this is the easy way to remember the characteristics of those financial information. You are mice, that means understandable, reliable, relevant, which means it can make a difference in time, consistent, and comparable. Now if you look at the note, CPA prep note, it talks a little about the limitations of those financial reporting. Of course, the reporting has some limitations, so you can take a look, and they actually mentioned that the limitations means sometimes you will see that some information it's based on some judgments or some estimates, and basically this is the only source of information for any governmental unit, so citizens or any external users may need to completely rely on those sets of information, and it may not meet the diverse needs of different type of users. And of course we also need to think of the cost benefit analysis, whether it requires a lot of cost to produce those financial information. So this unit basically covers the conceptual framework and of course the objective different type of users of financial reporting for any governmental entity, and then they have also some quick concept check questions. Now we will focus on some key concepts, and it's talking about fund structure, fund accounting, and external reporting. So when we discuss about the fund structures, we'll review the concept of governmental, proprietary, and fiduciary funds, and we all learned from our textbook chapter 16, and we'll also discuss on fund accounting, basically for the governmental funds that use modified accrual method and mostly focus on current financial resources. And on the other hand, proprietary funds and fiduciary funds, they follow accrual accounting. And then we'll learn a little about the external reporting, which is basically fund financial statement and government-wide financial statement, the comprehensive annual financial report or CAFR, and that of course includes different type of notes and a reconciliation statement that shows the link and the gap, the explanations of the gap between the fund financial statement and government-wide financial statements. So now I'll draw a quick chart. We actually did it, but it's actually a quick recap, and I'll also recap all those points that we learned from our textbook and from these CPA materials. Now let's look at the basic concept of fund structures and different type of funds within each category. And we actually learned this, but I'm recapping again. So basically there are three types of funds: governmental funds, proprietary funds, and fiduciary funds. So governmental funds, also known as all of those recording methods known as fund accounting, and that follows the modified accrual accounting, and basically these are current financial resource focus. So here there are several funds that we also learned: general fund, special revenue fund, debt service fund, capital project fund, and permanent fund. I underlined these letters because the CPA material gave you one tips to remember the names of those funds, and they call it GRAFs. GRSPP. G stands for general funds. So basically that covers and focuses on regular government operations, and those are financed by taxes or other type of general revenues and all other transactions that are not in any other funds. That is the general fund for G. Now special revenue, so we took R from here. Special revenue funds means those revenues from any specific tax, and that is actually restricted to any specific or particular government activities, so they denote it as R, which will remind you a special revenue. Now third type of governmental funds is the debt service fund. Debt service, so they took S from the service. So debt service funds basically focuses on all those resources from debt issues and the payment of any interest and principal. And then it comes the capital project fund, and we took the P from project, capital project. So this focuses on all those resources, and those are actually assigned or committed, or those are restricted for acquisition or construction of any capital assets. Of course those are long term, and except those are not financed by enterprise funds. And the last one is the permanent fund. So the permanent fund focuses on all those resources that are legally restricted to use. That means you cannot use those funds, but if there is any income derived from the fund, that can be used to support governmental programs. So under these governmental funds, or which is basically known as the fund accounting, these are the five types of funds: general, special revenue, debt service, capital project, and permanent, and you can remember them: GRSPP. And under these governmental funds, they will prepare a balance sheet, and basically on one side they will report all of their current resources and deferred outflows, and the other side they will report all of their current liabilities and deferred inflows, and the difference they call it fund balance. On the other hand, they will also prepare a statement of revenues, expense, and changes in other funds, where they're gonna list all of their revenues, expenses, and if they have any other financial resources or uses of those resources. And this is how, after subtracting their expenses or any other financial use from their revenues and other financial resource, they will find out the net change in their fund balance. Now let's focus on the proprietary funds. So we know that proprietary funds basically covers all those business type activities, and it follows the regular accrual accounting, and it covers all of those economic resources, no matter it's current or non-current. So it's kind of typical accounting methods, and they have two types of funds under this proprietary category: internal service. So these internal service here basically covers all those services or goods in exchange of fees to another governmental units. That means they are providing services, and basically the users of those services are another governmental units. That means their customers are internal within the government. On the other hand, for enterprise funds, they are also providing the services, but now this time the customers are public or external. And of course, most of the cases you will see the enterprise funds are supported by those user fees. So to remember these two types under the proprietary funds, so the notation is SE. So S stands for internal service. Internal means they are providing service within the government, they are charging fees. E stands for enterprise. That means they are providing service to the external customers. Now the third category, which is fiduciary funds. So basically these are the trust type of funds, and those also follows the accrual accounting and both current and non-current focus, and they have different type of categories. One is known as the custodial funds. So these custodial funds, it's kind of the temporary custody or any type of tax collection on behalf of another government. So basically, so all of these fiduciary funds, those are kind of trust, and they, any governmental unit cannot use it. So for a government wide financial statement, you will not see this type of funds. Basically for the government wide financial statement, they will focus on the governmental activities, which is basically covers the governmental funds and business type activities. Those are basically these proprietary funds. So here custodial means that if any government can collect on behalf of another government, so they are kind of keeping the fund it's as a temporary custody. Then they have investment trust fund. So these investment trust funds is kind of the external investment pools. And then they have private purpose trust. So these private purpose trust, those are neither investment nor any type of pension assets. So this covers special type of trust. And basically pension or any type of other employee benefits. So basically these are, we all are kind of familiar with these are those type of any type of employment benefits or pension assets. Those are dedicated for those specific funds. And for both proprietary and fiduciary funds, they will prepare the statement of their net positions, and that will cover their all assets and both short-term and long-term, plus deferred outflows in one side, and on the other hand all liabilities and deferred inflows. So basically here the difference between this asset size and liability size, we'll call it net position. On the other hand, for this proprietary fund, they will prepare the statement of revenues, expense and other changes in the net positions, and they will show all of their operating revenues and non-operating revenues. But basically first they will show operating revenues, and then they subtract operating expenses, and then they will list non-operating revenues, and then they will subtract non-operating expenses, and this is how they're gonna show the net changes in net positions. And then for finally the fiduciary fund, they will prepare the statement of net positions, which is also balance sheet type of things, covering both short-term long-term assets and the difference between the assets and liabilities. They call it net positions. And for the statement of changes in net position, it's basically the addition of the fund and the deduction of the fund. And to remember these fiduciary fund types, the notation they use is for CIPPOE. So this last OE that covers both like this pension and other employment benefit categories. So if you want to use their tips, then it might be helpful for you to remember all different types of funds. Now there is a quick concept check questions. Which of the following leads to the use of fund accounting by a governmental organization? So basically they're focusing on the use of fund accounting. So we discussed all those funds and why we should report those fund accountings we're gonna use and what are the reasons for those use. Of course, the reasons that we discussed, one is financial control. That means when they prepare the budgets and then at the end of the year they check how much they actually estimated for a specific function and how much they expense. So for budgetary control, or you can also call it financial control. And another reason for those fund reporting is of course the legal restrictions, because if there is any type of legal requirement, or if there is any type of minimum disclosure requirement, of course the governmental units must need to fulfill those requirements, and because they are actually accountable to the public. So both of them are the use of this fund accounting by a governmental organizations, financial control and legal restrictions.